All right, event trader here. We're just in the middle of a relatively slow day here following the morning activities. The rest of the afternoon's kind of died off. Probably should expect a lot of this type of action over the course of the week. Um, I am going to take this time then to kind of go through. I'll probably do a lot of it this week, and I think Scott might be joining me here. But and speak of the devil, there he is.
It's
Hi,
more of an angel, but
speak of the
okay.
angel.
All right. No, I'm here.
So yeah, Scott, I figured we've done this in the past. It's gone over well. People certainly seem to enjoy it. So I'm going to kind of pick up from where we last left off, which would have been around the July 31st earnings, and just moving on some of the August reports that we've seen and taking a look at some of these names. But the first company I'm going to take a look at is Band, B-A-N-D. So
Never heard of him.
it's a. I'm gonna get my piece up. It's a another cloud play. I'm just about positive on. Let me pull up this page first. But let me just make sure I got that right, Scott. So, band. Should I have this prepared there? 16 million float, 6% short interest on this one, so a possible big mover. And this is cloud-based software as a service provider. So basically, the cloud company to the cloud companies is, I guess, how you would look at this. It's a name that I had looked at in the past just because I was curious to see if they would be able to hold up some of their gains a couple months back. They would eventually give up a fair share of it, but now they rallied, as we could see post earnings, Scott. They were holding up around that 75 level, and they were able to break out above 80 to the 90 area. Taking a look at their report, they beat by 13 cents. They beat on revs, and they guided Q3 EPS and revs below consensus while guiding to FY19 in line. Dollar-based retention, always a key number for these names. It's only 113%, which is lower than most we've seen and was down from the 119% that we saw. This is basically, think of it as a software company's same store sales number. Now, they, despite this report, they were able to hold that 75 area, now march higher, stalling out in that 85 to 90 area. So what do you see in Band here, Scott?
It's extremely strong stock since it made its debut. It looks like over a year ago, and banging up against all-time new highs here. And this one's got to be. I'll be honest with you, I never heard of this. This is off my radar, not because the volume does trade less than 500,000 shares, but man, that chart looks beautiful. I mean, you look at this price action for just this year alone. It had a really strong start there in Q1, and then every pullback to the 50-day moving average has pretty much been defended, and then you have some nice consolidations with the recent breakouts and new highs. I like it. I like it a lot, actually. When did it report? It reported like
They
early
reported
August.
July 31.
Yeah, okay, on that gap up reversal, but then it held the 50 days again. So, yeah, this is an interesting one for sure. I definitely think it warrants some further research if you like these types of stocks.
I'll take a little bit of a deeper dive into Band. That was one that I looked at in the past. I posted some comments previously. So that's the whole point of this exercise, Scott, trying to find some names that are looking good here.
Give me one sorry, give me 1 second. I want to see
Sure.
if is that on the emerging growth list, because that tends to have a look that reminds me of it.
Yeah, it definitely looks like the type of chart one would expect to see on it.
Yeah, I don't see it on it. I'm looking at it. I would say at some point it probably was on it, but the higher it got, it probably had a larger market cap of some sorts. But looking back like a year ago, it was probably definitely on it. But anyway, good stuff.
All right, so what I'm doing for the listeners at home, and Scott, if you got an interest, I'll be able to export this to you. I'm just creating a buy and a short list from when we're going through these names here and just jotting them down. And basically, if you think the market's going to break down, you're going to want to know what the short list is, and vice versa, of course, if you think you're going to break out. So I'll post that and try to make this a little bit more interactive for creating the ideas. But next up, Scott, what we're going to want to look at is Cirrus Logic, Apple supplier, CRUS. Pretty solid quarters. A lot of Apple had and a lot of their suppliers beat by 20 cents. They beat on revs, and they guided their September quarter revs above consensus, which is pretty rare. Which was pretty rare from what we were seeing from a lot of these names. Most people were taking advantage of trying to tone down market expectations, given the lower expectations in general. This broke out to a 17-month high afterwards, and so right now we saw it rally above the 50 CSIQ, get down to about 60 before rolling over here, and now it's just kind of been muddling around in this 53 to 55 area.
Yeah, this chart looks really nice as a turnaround play. It struggled throughout 2017 and early 2018, but it has been somewhat turning around here this year. Back above the 200-day moving averages, nice response to earnings there a couple weeks ago. And like you said, that psychological 50 level is a nice little area to be looking at if you like this name to get some on the long side.
You know where your risk is, right? I mean, if you're taking this, Scott, I assume you'd probably be looking at the gap up low of 51.40 on August 1. Would that be a fair level where you'd want to have your stop, or would you be looking for that 50 CSIQ stop?
I'd be a little bit looser on this one just because I see the 50-day moving averages are on the rise, and right now they're at 49 and 47. That's the exponential and the simple that I like to track. So it is possible that this stock is probably going to sink down to, say, $50 or so, where that gap is. It could, that's a wide gap, though. It's between 51.40, like you said, and 50. So, and the ATR, let's look at the ATR on this stock. It's average true range. It's around $1.50. So you got to basically give yourself $1.50 wiggle room if it does come down towards that 50-51 support zone. By that time, the 50-day moving averages should be rising up to meet price on the pullback. And I think you have a nice combination of gap support, 50-day moving averages, a psychological number all in play there to kind of get some loan there. But you probably have to still risk, at least $1.50 somewhere, assuming you got in around that $50 area. So I do like it. I'll send an alert for this one. I'll send an alert at 51 and 50, and then just keep it on the radar.
All right, next up, we're taking a look at Kratos Defense and Security Solutions, KTOS. It's that drone play, Scott, we've talked a lot about. This is one that got beat up post its earnings. I've seen this numerous times. AV is another one, of course, where they simply just don't post the type of results that one would hope to see on a growth story like this. We see that right around those earnings, which they beat by 2 cents. They beat on revs, but then they guided Q3 revs below consensus, and they lowered their FY19 outlook, which is obviously always a cause for concern. Now, the guidance wasn't horrible. They just lowered the top end of the guidance there, but it caused the stock to break down after that big run-up, fall through the 50-day moving average and the day after in reaction to earnings, and once it broke that, the dam was open. You can see that on the chart. It did fall down to the 1764 area. That's marking the 200-day moving average, and it has bounced back about 11% off that to get to 1924. Actually, we'll call it 8% off that, coming into some significant resistance with that Site 20 level. I don't know, Scott, I know you always like to look at this 20 level as companies that have earned the right to get up there. I don't know if this one has. So, that 200 support, you like seeing that bounce off, but I don't know if we're done testing that just yet.
Yeah, that's a tough call. So look, bigger picture, we look at like a weekly or a monthly chart. The stock is really strong. It looks really great on the longer term prospects of a trend line for the
What do you want
last
me
year
to
or
show
two.
here, Scott? A weekly or monthly?
It doesn't matter. It doesn't matter. You can pretty much just do whatever it is, but it's pretty obvious that the stock is in a significant multi-month yearly uptrend. So it's got that going for it, and it does look like it did get a little bit too far ahead of itself during the early spring there, when it ran up to $25 or so, and now it did correct about 30%. And there's certain things in trading where call it behavioral finance or psychology amongst traders or whatever, but when a stock corrects 10%, 20%, 30%, 40%, those round percentages, those psychological numbers, the prices tend to react to them. Now, maybe it's just a coincidence of sorts, but if they line up properly with key moving averages and other areas of support and resistance, it just makes you a little bit more confident in going in with taking a position at a certain level. So KTOS, it dropped about 31%, I think it was. I just calculated. Let me just check again.
Yeah, easily.
Yeah, 30.
Even
Yeah,
more.
30%, and it brought the 200-day moving average into play around $17-18. It had brought in that multi-month uptrend line. It also brought into the May pivot, the breakout point back in May that cleared the February high. So you had a lot going on there around $17-18. And I think if you still like the story here, and this one is definitely doing it better than the other drone play, AVAV. So I think if you like this one and you think this is a leading space somewhere down the road, you're jumping on a long-term trend after a 30%, give or take, corrective move. So it's definitely worth looking at, as long as it stays above, say $17.
Okay, so next up, we are going to take a look at Lam Research. Scott, I know that this is one that you've played a lot in the past.
Mm-hmm.
Interesting report from the company here. We're just taking a quick look at. Hold on a second. I'm going to pull up this chart. We can see that it reversed post earnings. I'm going to pull it up in the daily to give you a little bit of a better read. So it's a decent report, pretty much typical of what we've seen from these these semiconductor plays here, where they were able to beat by 19, reported revs in line, and then guided Q1, which they were just reporting their Q4 below consensus. Pretty commonplace. Q1 was also a little weak here, coming in below EPS and rev consensus expectations. Basically, what the company was saying was weaker spending on memory was leading to the weakness, but they continued to expect the WFE to be down mid-single digits, with memory incrementally lower, but they did expect foundry and logic tracking to move higher and noted that this would be more second half weighted. So this is going to be a story that we're going to watch to see if it plays out. But for Lam Research itself, we saw the stock rally briefly in response to earnings up to that 217 level, and then reverse back rather aggressively at the beginning of August. It did come in to hold those two areas that we're watching right there. It's going to be the 50 and the 100-day moving average, and it's really just been kind of climbing up along those since then to get back above the 200 level, where it now sits. It seems like this is in a little bit of no man's land, but the chart does look pretty good over the last couple of months.
Yeah, it's definitely. I'm just looking at the growth on the top and bottom line over the last year or two, and it's definitely been slowing down somewhat in that regard. Especially in October when most of the semiconductors, led the market to the downside during that Q4 of last year. It did make a nice recovery effort, though, come February of this year, getting back above the 200-day moving averages, like you said. Just trying to grind its way higher here and make some sort of effort. So I like the space overall. I do like the semiconductors. If you take a look at the SMH, it's still in context of outperforming for the year amongst the technology arena. And it's holding its own for now. It's definitely looking a little bit more suspect after this recent August corrective action in the market. But if things start to turn around come September and they start clearing these August resistance levels, I think LRCX Slam Research has to be one to be on your radar for a potential move back above, say, 215, 220. Right, Kev?
Yeah. I'm sorry, I had myself muted there for a second.
Okay.
But yeah, I mean, so far you've been leading along on a lot of these names, all of them at the moment, right? So,
Well, again, let's.
but I'm just saying it's interesting to see how the charts are setting up like that, considering how negative the overall market sentiment is.
Well, let's just take a step back and look at the forest through the trees. Everything that's going on lately, and I think I mentioned this in one of the columns today I wrote. I can't remember which one it was, but if you take a step back, I mean, the concerns are around tariffs and trade. The concerns are around a recent inverted yield curve that sometimes leads to a recession 6 months to a year down the road. So you still have time with that. And then I think it even went back. It didn't. It's no longer inverted still, is it? I can't remember.
No, it's no longer inverted.
Yeah. So like, where's everybody on that saying crisis averted, recession averted? No one's even talking about it anymore. So again, everyone just seems to be jumping the gun. We have tweets and headlines, and the market's responding so sharply and so quick to them because it's just this very panicky mode that the market's in overall. And yeah, the market's going to go through corrective phases, particularly during these summer doldrums. They tend to have a period where liquidity dries up and they can knock stocks down and things get a little bit more volatile.
I think that's the key thing from what we're seeing too.
Right.
I feel like it looks a lot more volatile than it is.
Yeah, I agree 100%.
Because of the lack of liquidity that we get in a late August. I think last Friday was a perfect example of that. And for me, it always goes back to, I just think with all the bots trading now, that we tend to see a lot more of these V-shaped recoveries and sell-offs out of nowhere on one headline.
Yeah, totally. And August has been really choppy and frustrating for a lot of different traders out there with different styles, whether you're scalping or whether you're swing trading. But that's typically the case during these types of conditions. And now that time heals all wounds is basically an old saying, and it's similar to chart patterns. The longer that prices don't typically remain highly volatile and highly choppy for a very long time, and they go through this ebbing and flowing of consolidations and whipsaws and whatnot. And I think the 3 weeks time has passed and the dust is starting to settle a little bit. And I think maybe another week or so, going into September, we're going to see some nice opportunities after these recent corrective moves here. So I guess hopefully that explains my bias a little bit. And I'm particularly, playing contrarian here because everyone seems to have a case of the jitters. Everyone seems so bearish. Sentiment, AAI sentiment, came out last week, and it was one of the most negative readings in a while. They're so quick to turn negative on this market that I just don't see it going through some sort of deep bear market cycle just yet. I see all these corrective moves as potential buying opportunities after the dust settles and they start to prove themselves to the upside. So,
yeah. Well, I think it all comes back to too, Scott. Just when does the dust settle? When do we start getting some sort of normalcy? And I think that's at the end of the day, that's the biggest problem for the market sentiment is, we talk about uncertainty and how traders hate that, and certainly there's plenty of that around these trade headlines.
Yeah, of course. And then, I always say, like, once you get through Labor Day weekend, it's not like we're going to come back on Tuesday and everything's going to be fine. Liquidity is going to be, like, jumping in, and we're going to have a bull market on our hands. That doesn't work that way. In fact, it rarely works that way. It usually takes time for everybody to come back in. All the big money managers come in and again, and everyone assesses the situation. And then typically there's this choppiness going on, and then you start to get more of a better feel for sectors and stocks and movement and whatnot, and where the money's flowing as the days go on in September. So we'll be all over that. We'll be talking about what we see out there. But I plan on being more actively trading. You know, mid to late September and the rest of the year.
Yeah, I agree with that. Next up, we're going to take a look at cloud machine learning play Pluralsight. Ticker symbol PS. This one was hammered on its earnings. They beat by 8 cents. They beat on revs. They guided Q3 EPS below consensus, as well as revs. They did reaffirm their FY19 outlook. This is a typical play of a cloud play that simply failed to impress around its earnings and was thus taken to the woodshed. A lot of valuation concerns on all these plays here, and certainly Pluralsight was one of those names. It had support at that 1920 level, which was pretty large, but was unable to hold, and now we're seeing it just slip down to 1533. I've seen this chart before, Scott. The cloud arrow would be a perfect example of one that I just don't have much of an interest in this name until we see some sort of a bottom. And, I'm going to throw this one on. We haven't thrown any on the short list yet, but I'm putting this one on the short list, given this price action.
Yeah, I mean, the burden of proof is clearly on buyers at this stage. So if you're looking at the numbers and the fundamentals and you're seeing value down here, I'm sure you're already familiar with the fact that if you consider yourself to be more of a value trader, value investor, that you have to have a lot of patience and pretty deep pockets to do that. It's, and that's basically where I stand with this one. Again, it's fresh 52-week lows at $15. That is a nice round psychological level, but when you're going up against nothing else, that's not something I would really dive in with both feet if you like the story. So yeah, like I said, you got to treat it as a long-term value play if you like it on the long side. Otherwise, you can just short this thing, and as long as it stays below the weekly highs, or even that gap, if you got some more wiggle room at 20, you could just stay short till the cows come home.
All right. Yep. Sorry, just trying to do something. Trying to sneak in a little bit of lunch here, Scott, while we're doing this.
Sorry.
Qualcomm, which there's still plenty of legal issues surrounding Qualcomm, so probably not the greatest to look at the earnings. Certainly, the China tariff issues also at play for Qualcomm here. And just to recap their quarter, they beat by 3 cents, but they missed on revs, and they got a Q4 EPS and revs well below expectations. To give you an idea, they saw EPS in the range of 65 to 75 cents against the $1.10 consensus, and the revs were 4.3 to 5.1 billion against the 5.7 billion consensus. The Huawei impact and slowdown for demand for 5G hurt results. Again, a legal story here, but those earnings were definitely disappointing. But the stock is holding up relatively well. It feels like you got that gap up support around 70 from earlier. That was on the announcement of the Apple settlement, of course. That I think does provide you some solid support here. But I don't know. I'm still having a tough time getting behind the name given all the noise around it. You like Qualcomm at all, Scott?
No, not really. No.
Is it short even, or just there's just nothing here in this chart that's exciting you?
Yeah, I mean, you look back in this chart, say, you can go back 3 years in this chart, and it goes up 40%, 30%, and then it sells off 20, 30%, and then it goes up 20, 30%, and down to 20, 30%. It's just this constant roller coaster of a stock over the last 3 years or so. I will say this, I do recall when it's been trading down near $50 over the last 2 years. the dividend yield does tend to get up towards 5%, so that is a little bit more enticing. I would say if this thing ever gets down into the low 50s or lower, I'd be way more interested in it as an investment. Up here, still the dividend yield is still looking pretty here, around over 3%. But there's, like you said, there's so much legal issues in here, and if I don't know. I try to anytime I see stocks with legal issues, that unforeseen factor that it can just make it spike one way or another, and you wake up one morning and you're either up or down significantly. I try not to trade those things. That's like I haven't touched Johnson & Johnson at all. Qualcomm.
Yeah, they got that rolling out after hours too, Johnson & Johnson. So
I mean, that's I leave that to the arbitrators and the the hedge funds that know what they're doing with big people's money and taking big bets on those types of plays of how things are going to get, what the outcomes are going to be. For me, it's just too much of a headache.
Yeah, no, I agree. And anybody that tells you they know what's going to happen is just lying. Really, that is a pure gamble. And I know you're a percentage guy, Scott, not a gambler.
Yeah, I mean, if you can assess your risk on a trade, that I'll take it all day long. I don't know my risk on these trades. If I take a trade in Qualcomm, well, then I'm going to have to go out and sell some calls against it, or I'm going to have to go buy a put for protection. I'm going to have to do some sort of hedge against it just because I don't know how it's going to play out. Same with Johnson & Johnson, same with anything. When you know there's some unforeseen factor coming down the road at any time, you got to hedge yourself. You can't just go out there and take that sort of risk, in my opinion. So.
Yeah. And somebody was asking me about the J&J short, and this is kind of the crux of it. I don't know what's going to happen. I've heard anything from up to a 17 million or 17 billion fine, and that's just from the state of Oklahoma too. So I don't know where this is going to end up. But basically, they're trying to blame J&J as like one of the culprits for the entire opioid crisis. So.
Yeah.
So I highlighted it because I saw J&J sitting on a pretty key support level, but again, I'm not playing it because I don't know what's going to go on. I haven't been in part of the court proceedings at all, so I just wanted to highlight it to people in case anybody was involved either on the long or short side to be aware of those headlines. I do think that it's going to be pretty cautious, but I don't know. The judge could come out and say they're cleared of all wrongdoing, and the stock rips up 20 points.
Right, and like I said, the smartest guys in the room are really betting on these things, and they're hedged. They're hedged, so they're gonna, no matter what the reaction is going to be, they're gonna have to take off their hedges and unwind their positions, which is just going to create these massive moves that I just don't want to get involved with until ahead of time. Maybe afterwards, but not ahead of time.
Yeah, and that ruling, for anybody curious, is expected around 4 p.m. right around the close. So. Which makes it even worse, because then if you get caught up in after-hours trading and you're trying to trade out of a position, you don't know where you're going to get filled. So
right, and option markets isn't open in the after-hours, so you're going to be even more. Yeah, it's going to be nutty.
Yeah. Okay, let's take a look at Sunpower. Pretty good quarter for the solars in general. So we'll take a look at Sunpower and then just kind of comb through. First Solar was probably one of the weaker reports, which was disappointing. But this Sunpower ripped out above that 1150 area, got all the way up to 16. It has been reversing course a little bit, giving up some of those gains. But overall, that trend remains in a firm upward movement right here, Scott.
Yeah, I actually like a handful of these solar names. I've liked them for pretty much all year long. They were at the get-go right off the first quarter. The TAN ETF, TAN, was the solar ETF. That was an early outperformer during the first quarter of this year, and it's pretty much maintained a lot of that strength here throughout the last couple of months. And take a look at that TAN chart, TAN.
Just pulled it up.
Yeah, I mean, look at that. It's just it's whipsawish here in August, but it's not correcting. It's just riding above that 50-day moving average. It looks great. I do own it from a long time ago. I do have a small long-term hold in the TAN. I bought it like 2 years ago, I think, underneath 20 or something like that. Just been sitting with it. But yeah, it's definitely a nice strong chart sitting up here at fresh like 3-year highs. I think it's at. But you go to SPYR, that's obviously a big player in it. Like you said, for solar, I know is the the go-to cream of the crop one.
Yeah, they didn't have a great round of results, unfortunately, because I had the long in that. I'm out of it for flat right now, but watching it as it trades between that 60 to 64 area.
Yeah, CSIQ was another one. I
Damn,
think
breakwater.
Jinko Solar's coming out with earnings this week, right?
I believe so.
Is
Yes.
that JKS, right?
Yeah.
Yeah, that's been a laggard.
That's Friday morning.
Okay. But yeah, SPWR, that's definitely one of the top components of the TAN and helping boost it to go higher. So I like it. I like it a lot.
Okay. Next up, let's take a look at Twilio, Scott. TWLO, high flying cloud play, of course. This one has run out of a little steam as of late, though. I don't know if you'd consider it breaking that trend just yet, Scott, but post earnings, it dipped down, basically beat by a penny, beat on revs, and got a Q3 EPS in line with revs above consensus. Did raise its FY19 EPS consensus and revs both above consensus, but the beat and raise wasn't enough to excite people here. For instance, Q3 revs they saw at 286 to 289 million, 285.4 million was the consensus. So on the headline, the beat and raise looks nice and tidy, but overall, given the run up, there was a little bit of concern with this one, but I would note that they did beat handily on gross margins, and their organic growth rate is at 60%, which really puts it at the top of the line there. But the chart does look a little bit more susceptible at the moment. Not that I'd be shorting it, but doesn't have as much of a clean upward move as you would like to see, at least on the daily. And the weekly even showing a few signs of breaking some of that trend. Scott, how are you reading this chart here for Twilio? I know it's a name that you've played frequently in the past.
Yeah, in the earlier this year, I was trading it a lot on the long side. I liked it a lot just because the cloud computing and the software space was just outperforming year to date. So it was just simple. It was so simple to just jump on board any sort of pullback in context above the rising 50-day moving average and capitalize on the next leg higher on this one. Like you said, it has lost some of this momentum here with most of the market in August. But man, this is one strong stock. It's up over 500% for about a year and a half now. Just a leading growth name in that software space. Top and bottom line growth is just off the charts. It's just super high, and it's been maintaining that. So yeah, I understand valuations probably a little bit too far too fast for this name, but stocks like this where that growth is still there, they're not just going to come diving back in and lose like 50% of their value anytime soon. If this thing's peaking out, it's going to be a slow process where it's probably going to have to go through a couple quarters of gyrating around these levels before until like a really strong downtrend gets underway. So overall, I mean, look at this one. It was trading up near 150 back in late July. It corrected about 18 to 19% here in August. Now it's just chopping around the 130 area. It is a pretty wild stock, so you got to be a little bit careful with your position sizing in it because it does have an ATR somewhere in that $5 to $6 range. And it is, like you said, suspect below the 50. It has broken the year-to-date uptrend line, but it still has a very strong multi-month uptrend line off of 2018 levels. It's also still above the 200-day moving average, which comes in play around 119, 120. So it's on my radar. I'm not doing anything with it yet. It's just kind of sitting there watching it. If it ever drops back down to the 200-day moving averages around 119, 120, I'll be looking at it for a potential bounce if it happens sometime in the next week or two.
Okay, next up, we're going to take a look at a semi play here. Memory play, Western Digital. I got to be honest, Scott. I was a little surprised to see how weak this chart it was because I hadn't had a chance to take a look at it, but I was seeing some of the earlier comments about semis kind of being at the forefront of this bounce back here, and that's certainly not the case for Western Digital, which I guess saw a small bounce up early, but has been just trending lower. And taking a look at that daily, really just been going sideways for the last couple of months here. Taking a quick look at the quarter, they beat by a penny. They beat on revs, got a Q3 EPS in line. The revs above consensus, and they raised. Or, no, I'm sorry, I'm looking at the wrong. Got a Q3 September quarter EPS below consensus with revs in line. They did note that they were seeing some improvements in the flash market, as the company believes that it had been reaching a cyclical trough, which was pretty notable commentary for the earnings space. And they said that they were seeing some improving conditions in the flash market, and that was really what was driving the name back then. But we haven't seen investors kind of buy wholeheartedly into this, as the stock is really not rallied too much. I'm just trying to take a look at basically just been going sideways since that earnings report here. So it's coiling, and I guess it's going to depend on which story is correct. Do we see the slowdown continue, and we find these comments to be a little bit of hubris, or do they actually live up to the billing and break out?
Yeah, like you said, it's definitely been in a slowdown mode for the last year or so, with declining top and bottom line. But I'm not sure what triggered it in late June and July, but it really just, I thought it was, this was trading below $40, and then all of a sudden that whole little bit of a rally there in semiconductors.
I was going to say that was
Bounce back
just
up.
with the whole semi space, right?
Yeah, but this one was definitely one of the stronger ones, I think. Yeah, I mean, it was the whole semi thing, but I mean, it rallied 50%. That's a lot higher than some other leading stocks.
I think it got beat up a lot more though,
Yeah.
too, right? So
Yeah, that's of course, yeah, because it was suffering for over a year and a half or so. But again, I think you just nailed it. You pretty much nailed it right there. The stock is coiling here, mid 55 area. And people are just waiting on the next earnings report, I think. I don't think they really want to go diving into it because of the concerns surrounding it, because of the declining top and bottom line growth there. It is where it is, and they're just waiting for what's going to develop next down the road. Any sign of negative action is probably going to have this thing easily roll back over, and a positive action will, make this more of a turnaround play. I don't have any sort of opinion outside of that. Does it have a dividend? I think this does have a nice dividend, though.
I don't think it's a nice one. I think that they have one, but I think it's in that 1.7. I could be wrong, though.
I get confused this with Micron all the time. Very
Yeah.
similar, right? Actually, no, this is 3.6.
That's pretty handy.
Yeah, I think it's
Of course,
Micron.
nearly all of them are over the the Treasury yield at this point. though,
Yeah,
right?
yeah. So, cool. What's next?
Right, Archer Daniels Midland, ADM, another one that's caught up in the fracas of the trade headline here. The trade headlines, I should say. This stock's just been kind of trending along that 37 level since reporting. Broke down below 40 on some cautious comments. They missed by 5 cents. They missed on revs. And comments from ADM were basically, although the timing is uncertain, we remain confident in the resumption of agricultural trade flows between the U.S. and China, which will bolster margins in the U.S. grain export and ethanol industries. Seeing signs of African swine fever might impact global animal protein markets, which would be a bonus for ADM, of course. But really, the big problem for ADM has been the trade wars, as has been the case for a lot of these agricultural names here. So, but the stock is holding up well despite a lot of gyrations in the market. Doesn't look like people want to sell it under 37 at the moment to me.
Yeah, like you said, the confidence in management might be there, but it doesn't look like the confidence of investors are there at all. Here, year to date, it's been trending underneath those key moving averages. We talk about the 200, the 50-day moving averages. It's trading at fresh 52-week lows. I can't go in after a stock like this at this point in time. I would need to see some sort of better bottoming process. Now, for a short-term trade, I mean, obviously you can always slap on, an oversold RSI or an oversold stochastics, or wait for a MACD to turn around to play like a short-term bounce on a lot of these plays. But for the most part, as a longer-term investment, I mean, it does pay a nice dividend there, about 3.3% or so. And it looks like George Soros is the only major guru out there buying this one up, right?
Yeah,
I saw him there.
what I was saying.
Um, yeah, again, this is
Probably bodes ill for it.
Yeah, right. Yeah, I know. Yeah,
Trump hates Soros, right?
yeah, right. So I would say, it's one of these plays where I think as an investment you can look at it, but again, you might want to just be really patient with it and have a plan to add onto weakness, over time, because this one's just not going anywhere fast.
All right. Next up, we're going to take a look at Clorox. Scott, CLX, a staple play, of course. Beat by 4 cents, missed on revs. Decline in revs been a major issue for them. They guided FY20 EPS below consensus as well as revs. And the company's, this was a Q4 report, so this is going to be their upcoming quarter. Their Q4 gross margin did increase 110 basis points, so that was pretty positive, primarily driven by the benefit of price increases and cost savings. So the idea that they're able to pass along some of the higher costs that we're expecting to see from tariffs would certainly be a positive for them. But they are still running into some logistical issues with that trade. So that's going to weigh in on the name. The stock itself has just kind of been sitting there right around that 155 to 160 area ever since they reported. Stock was around 166 and got chopped up on the earnings report and the outlook. Sitting on its 200-day moving average today as we speak. So I don't know, be a little nervous of this one acting heavy if we did get a market rollover.
Yeah, it's always an interesting company to me. I mean, it's been around forever. And every time I hear Clorox, the first thing I think of is bleach. Am I right?
Exactly.
Yeah. What's that?
Exactly.
Exactly, but they do so much more. And I know that, like, if in my household, the Clorox wipes is probably the smartest thing that they've ever done, because I know we have Clorox wipes constantly in our house. I know that it's in our office. Yeah, they're in offices, they're in schools, they're in hospitals, they're everywhere. So that was one of the more genius market ideas, I think, over the last couple of years, was the Clorox wipe. But they also are involved in food, believe it or not. I'm not sure if you knew that. Just a little disturbing.
as long as they got the separate facilities, but I knew that they did Kingsford, right? So
yeah, and I think they do some salad dressings, and they also own the Brita water filter brand. Yeah, Burt's Bees and stuff like that. So this is funny. They were in a lot more than I think most people think. With that said, my point there is that this is one year classic. If you're looking for a buy what you know type of buy and hold type of portfolio play, I think this is always a good one to take a look at on dips. Dividend yield is sitting right around 2.7% right now. And this is, like I said, anytime I see household names that I use the products on and they pay nice dividends, and I start to see the RSI or the stochastics, go into oversold territory, it's always worth looking to see if you want to start nibbling on it in a longer-term portfolio, in my opinion. But overall, you look at the bigger picture of the Clorox chart, and it is doing quite well. Bigger picture, it is pretty choppy this year between that 145 and 165 zone, but it is also trading back up near all-time high. So It's just a strong name. It's a really strong name that I would just look to trade on corrective moves and dips.
All right, here's a name that is not as strong, and it's going to be DuPont. Ticker symbol.
Which ticker?
DD.
Yeah.
We're going to go with the DD one.
Yeah. Okay.
They reported earnings, of course, back on August 1. Decent round of results on the bottom line, at least. It beat by 15 cents. They did miss on revs. They got it at FY19 EPS in line. They were able to improve the gross margins by 200 basis points in the quarter. But, just it's really caught up in the trade war and chemicals and materials in general. Have not been seen much love because of that. Worries about a slowdown on business spend, of course. And DD we have sitting here coming in to try and find some support at this 63 area, which I believe it's right around year-to-date lows at this point, right? So it was 63,
Yeah,
62 on May 15th, so it hit 63, 69. So it's a biscuit away from hitting year-to-date lows. Has not been able to find any sort of buying at all. It's been on a rollover. It was trading around 72.44 at the time of its earnings, so it's down another 11 points since then. So it's got long downward trend here. Not a lot to like on this chart.
Yeah, this stock I've actually avoided it. Anytime you start getting mergers and changing of ticker symbols, I throw that right into untradeable stocks I don't want to get involved with. This was DWDP back in the spring, I think, and then now is it all finally resolved? Whatever was going on between Dow and DuPont and everything else, are we done with all that?
I believe so.
I haven't been keeping up with it, but yeah, because Dow is its own ticker these days, and obviously DuPont is. But typically, I'll just, knowing what a mess those things can be, I just kind of avoid these situations. As I said, a lot of smarter people in the room doing a lot of arbitrage are usually more involved in them. Gav, what's your dividend on this one? I'm showing a pretty solid dividend there of about 4%. Got that or no? I think he went to go take another bite.
No. 455 I got.
Yeah, I mean that's pretty sweet looking there.
So
I don't know. Is that still legit? I don't know if that's legit still. I'm showing different. I got a different source showing a different yield on that.
We'll double check that. I see it trading at about 15 times forward PE, so pretty reasonable pricing here. Price to sales right around 1.
Okay.
We could double check on that dividend yield to make sure we're not messing anything up with the split.
Yeah, I think it did get messed up because I got Dow DOW much higher. I think at 6 something. I don't know if that's accurate either. Yeah, but to look into that. I mean, but like you said, they're looking relatively cheap. I would group Dow and DD basically in the same group again. I know we're talking about DD here, but I don't know. You know what? I got to do more research on these groups. I don't want to say anything. Like I said, they're acting poor. No one seems to be interested in them. Like you said, the basic material thing with the whole trade war is probably the biggest concern right now. But if these dividends are legit, they might be another one of these names that you look at for much longer term, value plays in your long term portfolio.
All right, let's take a look at General Motors, Scott. Yet another one, of course, caught up in the trade wars. The auto industry's been arguably hit the hardest by this, given the global supply chain that they were in. And we'll take a look at General Motors, and then we'll take a look at Ford, Scott, because I know Ford's one that you were involved with. GM beat by 19 cents. The revs were in line. Strong North American EBITDA adjusted margins were really a key driver for it. That it's successful rollout of a full-size light-duty pickup truck that really helped drive a pretty solid round of results. But obviously, as we can see from this chart, nobody cares because it's all about what's going to happen in the trade wars. And GM has pretty significant exposure to China, so it's been trending lower, and now it's coming down to try to find some support around this 35 area, we'll call it. But the fact that it's dipped below the 200-day moving average and has been rejected twice trying to get back above it has me a little cautious on this name.
Yeah, for sure. So again, these are between Ford and GM and Fiat Chrysler. That's FCAU if you're looking at the ticker there. Really, I mean, these are just kind of these tradable dividend plays. That's the way I approach them. Anything with any of these blue chip type of big company names that are out there that have dividends typically over like 4 or 5%, like these stocks do. You can usually just slap on like an RSI or a stochastics to get that overbought, oversold indicator because they're not really growth names. They're not going to take off with like these strong momentum moves anywhere, and they tend to go through more corrective phases than anything. But then they bounce back. So I would just trade this. I would just treat these more as tradable. Opportunities when they go through like corrections of sorts and they start to become a little bit more oversold on the charts. Otherwise, I don't have too much of an opinion on these things overall.
Okay. Quick follow up to that, J&J. Thanks to the sub that wrote in on this. Apparently, what the market's looking for is about 200 million, from what I'm gathering. Purdue, which was the worst offender, settled for 270 million. So again, we'll keep an eye out for these headlines afterwards. It's Johnson and Johnson. If that's the case, then this could be a nice little buying opportunity around these levels. So we'll keep an eye out on that one. See which direction it goes. Okay, next up, just a GM. Let's take a look at Shopify, Scott. SHOP. That's another one that I know you trade frequently, and apparently if you're not buying it, you're not making money because all this thing does is go up. This thing's rallied from 120 back in December to 394. Pretty massive 200% plus rip there in the name. Beat by 12 cents, beat on revs, guided Q3 revs above consensus, and raised their FY19 EPS. No surprise that it was a beat and raise given the stock reaction here. Their gross payments volume, the GPV, grew to 5.8 billion, which accounted for about 42% of the GMV processed in the quarter. All fantastic numbers. Merchant Solutions revenue, that was up 56% in the quarter. So the company's just really hitting on all cylinders here, and that's pretty evident in the stock price.
What's their main business operation? They're just cloud software, or
they're an e-commerce platform, basically. Kind of think of them more like an eBay. So that gross merchandise volume is always a key item. So it's people moving products on their platforms.
Yeah, I mean, this is a textbook definition of a company that's doing everything right, technically and fundamentally.
And if people are curious, it's 100 million float and only 4% of it's short, so it's not like this thing's a squeeze. It is trading at 33 times price to sales.
Yeah, it is pretty volatile, though. I mean, I can tell you that much. A few times I've traded it.
15.
Yeah, 15 for a $300 stock. I mean, this thing definitely moves. You got to definitely have their position sizing management just well in check. You can't just go out there and buy normal size here. You have to reduce things to compensate for the volatility in this one. Yeah, it's been on and off the liquid momentum focus list. It's actually on the last one, and it's probably going to stay there right now throughout the year. I mean, it's just super strong. I don't know what else to say. It's just banging on all cylinders, heading up to $400. Overvalued to me is always a definition of a strong uptrend, and I'm just going to keep looking at buying opportunities until the trend changes. So it's that simple.
All right, let's take a look now, Scott, at one of my portfolio holdings here, and that's Verizon, VZ. It's been an interesting name. None of the telecoms have particularly great earnings, but I have been happy to see this one just really holding that 54 level. I would like to see it get above that 200-day moving averages. That has it looking a little heavy to me. It's certainly in a downward trend here, but I'm still up. Got in around 47, so still up nicely in it. So longer term hold, as I said, 4.3% divvy, which I'm perfectly content collecting that. I think that the stock is steady enough with this 54 support that I'm not overly concerned with it.
Yeah, I own this too for years now, just because of that fat dividend that it pays. I'm a Verizon customer, so I like the fact that, getting a paycheck from them every 3 months is helping to cover some of my, unlimited family plan that I have. That's
And
seriously
it's expensive, but it's funny because I was just up in New Glarus, Wisconsin a week ago,
Oh,
and
nice little spotted cow action.
exactly.
Nice.
And I'm more of a Moon Man guy though, but I was the only one that was getting service out of all my friends. So like I should have just been sitting there charging them for any time that I had to call an
Wait.
Uber.
What are you hanging out with underage? Oh, getting phone service. I thought you meant getting served. I was like, what are you hanging out with underage kids?
They think I'm cool, Scott. What can I tell you? No, I was they had.
For anybody that doesn't know, New Glarus is a brewery out in the Midwest in Wisconsin.
Yeah,
so
you can only buy the beer in Wisconsin. It's fantastic if you get a chance. But no, they had like T-Mobile and two at T-Mobile and one at Sprint. So and I was the only one getting service.
Gotcha.
Wireless
service.
Yeah, I mean at the same time you are in New Glarus, so it's not like that's a hotbed of entertainment. But
yeah, I've been out there a couple of years ago. There's nothing for miles. It's just rolling hills. Yeah. So.
It's good. The service is great is what I was getting at.
Yeah, exactly. I like Verizon here. It's actually it's very choppy year to date, but it's still, one of those steady Eddie performers with a nice dividend. AT&T, I got to bring that up real quick. That has been doing a little bit better than Verizon performance-wise. Still, that has a much bigger dividend. I think the last I checked, it was 6. I want to say,
which is amazing considering how much debt that they own.
Yeah,
but,
so it's. And there's definitely concerns about that.
5.86.
There you go. It's definitely seems to be more hated over than Verizon, but AT&T has been clawing its way back and doing pretty darn well here the last couple of weeks. Even more so here in August as it trades up to a fresh 52-week high. So sometimes you gotta just go with the market and what it's telling you, and that AT&T is acting a little bit stronger there.
Yeah, I think a big part of the AT&T move over the last couple of weeks has been that drop in interest rates. AT&T is the most heavily debted company in the U.S., so they're always going to kind of rotate a little bit when you see rates on the rise, they're going to be under pressure, and when you see them declining, that should help them out.
Don't you think they hedge themselves somehow? They have like some sort of finance departments that do something or other. I don't know. I don't know the whole operation, but I would think that they are well aware of their debt.
Yeah, I'm sure they are. Hopefully they could put it together better than their bills that they send out and stuff. But yeah, I don't have much good stuff to say about AT&T. So
I don't think anybody really does. But it is a massive company.
It is massive. So, I'll give them that.
No denying its presence.
Yeah. So okay. So next up, let's take a look at Wayfair. This is a 60 million float, 20% short interest. Missed hitting on their expectations. They beat by 2 cents and they beat on revs. And the EBITDA loss was smaller than expected, but the guidance was a little weaker. And one would have thought we would have gotten a little bit more of a squeeze than we did, but instead just kind of got that pop and then the rollover. And now, if I'm short, I'm not moving on this name at all. I'm just going to hold steady until I get some money back here, because I think some of these shorts have been getting lumped up pretty good. We see as the stock ran from 80 to 170 following their Q4 results. You can see that big gap up there. But now we're back down to coming into that 100 psych level, and it's got a little bit of that Beyond Meat air is getting let out of the balloon here.
Yeah, but if you're short, you're definitely not alone on this one. I think the short interest is
20%.
20?
Yeah.
I thought it was higher than that.
I got it.
Close to 50.
I got it. Hold on. Sorry.
Again, the short interest could definitely be skewed depending on
I got a 61 million float at 20% short interest.
Okay, all right, 20%. All right, still, you're not alone on that one. So
yeah, definitely not alone.
Yeah, so the shorts, like I said, always, when you get high short interest, typically over 10%, 15%, you need some sort of catalyst to start squeezing price action. Typically, it's an earnings report or a headline, and then more secondary, you need the actual taking out of resistance levels to generate the squeeze potential as shorts go out to buy stock and cover their positions. So until that happens, the stocks typically will continue just to sink lower and lower and lower. Because of the shorts that are out there, and no one's really buying it for whatever reasons or concerns that it may have. So, in this case here, I think it's in a downtrend in the last couple of weeks. I want to say it has to get back above the 200-day moving averages, but that's like 24 points away, so that'll be a 22% gain. So it's just a wild stock. You got to be really careful with this one. Again, position sizing is going to be key on it, but it is in the downtrend here the last couple of months and last 2 months or so. And I say as long as it stays below 120, which you can probably go back to the February gap as well that broke down recently. So as long as it stays underneath 120, I think the short's going to be okay.
All right. Well, with that, Scott, we're going on about an hour on this segment, so I think this is something we're going to do probably a lot this week. It's going to be a little bit slower, so now is always a good time to kind of go through and look back and see what's moved and go through these trades and kind of build off of that. So we'll cut this short. In about 5-10 minutes, we'll jump back on, take a quick look at the day ahead, unless you got anything else to add at this point, Scott.
No, I'm good.
Okay, so we'll talk to everybody here in a couple minutes.